Let's also welcome Anshul Sehgal, who is the Executive Vice President at Kotak Portfolio Management Services. Anshul, thanks a lot for joining in. Season's greetings. This Christmas is actually more red than green for the stock market, at least this week. You've been making the point that we managed to hold on into the green despite the massive sell-off by FIIs. The question is, how long does it hold on for? Because now we're barely about 2.5% into the green, and the FIIs have sold almost $34 billion in this calendar year itself so far. What's your prognosis for 2023, and what happens to the index?
Good afternoon. Thanks for having me, and season's greetings to you as well. 2023 is likely to be a volatile year. 2022 has been, again, it's been a very narrow market in 2022. If you were invested in the broader markets, probably you didn't make much money. If you were in the right stocks in this year, you obviously made a lot of money. Look at what happened to the PSU banking space. And at the same time, the darlings of last year, which is the IT sector, that sector didn't do too well. So essentially, this is a year where if you had some understanding of visibility on earnings, you made money. And if you were out of such names where there was visibility on earnings, clearly it was a tough time in the last year. Next year is likely to be somewhat similar. It is going to be a narrow market. You've got to choose your pockets much more with much more distinction. And I do believe that next year is a year where you will be able to make money if you're in the right pockets. With the recent correction, I'm spoiled for choice. There is a lot of opportunity in the markets. Of course, you've got to, as I said, seek earnings visibility. As long as you've done that, hard to go wrong in the next year.
Anshul, just a good afternoon. Very near-term, here and now question. What is it's a sharp correction, right, today and yesterday as well. What are you picking up? I mean, what's the dominating driver narrative right now? It's just a pullback, profit taking, but it is forceful. That's why I'm asking that.
You're right, Prashant. Good afternoon. So in the near term, if you see what is happening today, as also in the last 2-3 days, you've seen the pharma sector do well. And you've seen most other sectors, particularly the cyclical ones, those getting impacted fiercely. Now, that tells you that there is clearly a thesis that is being created by the markets that COVID is probably back. And as a result, pharma companies are going to benefit, and cyclical sectors, say the financials, particularly the financials, old world financials, which have of late done well, but have a history of being overtly cyclical. Those names are going to get hurt. And that trade has played out in the last week. Many PSU banks, nearly a month, 2 months returns have been given away in the last 3-4 days. So clearly that is the thought process of the markets. And it was warranted also. Indian markets were expensive. They needed to correct a little bit so that a base is formed for the next leg of the rally. And I wouldn't be too perturbed as long as earnings remain steady, our GDP growth expectations don't get downgraded, and corporate earnings also don't get downgraded. As long as that happens, I'm a believer that this correction, and if there is more to come, is only healthy for the markets.
Anshul, so you are betting on stocks with good earnings visibility to do well even in 2023. You know, if we had chatted same time last year, we would have never anticipated the earnings recovery that we've seen in the banking space, even in the large cap private sector banks, in the PSU banks. As we speak today, can you tell us some sectors, some stocks which are at the cusp of a turnaround in their earnings or a big acceleration in their earnings growth, something that the street has not priced in yet?
Good afternoon. Just like last year, PSU banks as a space was not anticipated to do too well this year. We anticipate that in the coming year, NBFCs will be in flavor, and particularly NBFCs which have been forgotten about in the past. There are many NBFCs whose stock of liabilities is fixed interest rate in nature, and their assets are variable interest rate in nature, which means that they will see an expansion of their spreads. Now, these NBFCs, many of them are trading at really throwaway valuations. That, in our judgment, is going to change in the next year. We see defense. I mean, just yesterday we saw 84,000 crores of order booking by the Indian military, and 97% of that, somewhere close to 82,000 crores, was towards indigenization. Now, this is a trend which is going to catch pace in the current year and going forward. That space should do well. Real estate is only at the beginning of a multi-year cycle in our judgment. Both real estate developers as also downstream companies are going to benefit. So these are some sectors that we are quite positive on. And then there are, of course, individual opportunities, say in the PLI space, electronics manufacturing space, which will be beneficiaries.
All right, just on a couple of these stocks, 2021, the start of 2021 on the Nifty was definitely Tata Motors with over 130, 140% sort of gains coming by. This year, while all the other auto stocks did do well, Tata Motors was the one which was lower by almost 20-odd%. You spoke about opportunities being there in individual stocks, etc. I mean, is there anything that really stands out for you that you think can do extremely well in 2023?
I would refrain from talking about individual stocks, but I mean, we are seeing opportunity, a lot of opportunity across sectors. Even before the recent bout of correction, many small and mid caps, and in fact, you only mentioned prior to my coming on air that the small cap index is down 19% year to date. Now that tells you that many stocks have corrected more than that. And I must mention that many quality stocks having ROEs in the region of 20+% and long-term growth trajectories of 20+% earnings growth. Such companies have corrected 30, 40, 50% in the current year. Now we see opportunity there. Many of these are related to diverse sectors, say the air conditioning space, say the electronics manufacturing space, the fast-moving electrical goods space, NBFCs. Sugar, for instance. There are segments of the market where opportunities have arisen, and those have arisen prior to the recent bout of correction. So I do think that for the discerning investor, next year is going to be a year of laddus.
No, I absolutely. Look at the market, by the way. Another leg down. This is the last and not the last, but the latest leg down, which is sliced through 17,800. If you can have the intraday up, and now it is basically made a low of 17,780. So another 30-40 points gone just like that, very quickly on the index right now. So this is a very sharp. Now this is approaching the 2%. When the last time we had a full 2% fall, sort of 1 day fall? I think you'll have to go back some time to get that. So that is what we have right now. Anshul, I was saying this earlier that the general mindset has been that you buy the dip and you make money, right? But yesterday and today things are that has not worked, and we've had a forceful kind of deleveraging, sell-off, whatever you want to call it. Will that mindset also change? Are we at the cusp of a bit of a change there as we enter the next year for the broader market?
Prashant, I couldn't agree with you more. Investors have a tendency to seek patterns and invest behind those patterns. Now, markets, again, don't oblige. Markets, as long as you're investing behind certain patterns and there is a convergence of the market towards one pattern, markets tend to surprise people on the other side. Another pattern that I could speak about is the year before elections. Go back 20 years and you will notice that whether it was 2003, 2008, 2013, 2018, all these years saw a correction in the markets. But that doesn't mean that this is a pattern that is going to be replicated next year. It may be, but it may also not be. So the point being that patterns, while you should have them at the back of your head, but investing, in line with patterns is not always correct. So that's our view on this. And so, I mean, just thinking that because the markets are down 2%, we should be investors, that is speculation. It's better to look at quality names. If they are cheap and you're a willing buyer for the next 12 months to 24 months at these prices, then it is a good time to buy.
Anshul, thank you so much for joining in. Always a pleasure speaking with you. Wish you a very happy new year. And may you make a lot of money in 2023. Like you said, there are a lot of opportunities as well. Thank you.
Thank you.
Let's talk about the market itself. We have the India VIX, which has rallied, 7%, 12.5%.